Taiwan says Chinese Coast Guard, research ships near key China Sea islands. The leverage shift starts now. Here is the signal that separates noise from actionable change. We will map trigger, incentive shift, and downstream impact before the close. This is not routine. It's a pressure play that's already rippling through markets, and understanding what's happening, and what happens next, matters for your portfolio. Here's the context. The South China Sea is home to roughly 30% of global maritime trade. That's $3.4 trillion in annual shipping volume moving through these waters every single year. Taiwan controls some of the smallest but strategically critical positions in this space. When Beijing moves assets closer to those positions, it's signaling something specific: territorial assertion paired with deliberate gray zone testing. Why now? Beijing has been incrementally tightening its grip on the South China Sea for a decade, but the pace and scale just shifted. Research vessels alongside Coast Guard ships is a classic two-tool approach. The Coast Guard handles the intimidation narrative, boarding vessels, issuing warnings, creating friction for commercial shipping. The research ships document and map, establishing what's sometimes called a presence baseline. That baseline becomes the legal and political foundation for future claims. For Taiwan, this is the daily reality of being a democratic island 100 miles from an authoritarian state with a military budget 8 times larger. But for markets, it translates into something concrete: increased shipping insurance premiums through the Taiwan Strait, higher operating costs for container lines, and regional volatility that spills into semiconductor supply chains. Taiwan produces 92% of the world's cutting-edge semiconductors. Any disruption to Taiwan's security or its operating environment creates systemic risk in tech, automotive, and consumer electronics globally. Here's the second-order effect nobody's pricing in yet. If Beijing escalates these operations into a blockade scenario, even an informal one, shipping insurance through the strait becomes prohibitively expensive. Container lines start routing around Taiwan entirely, adding 5 to 7 days to Asian to US transit times. That's not just a margin squeeze for shipping companies. It's a shock to just-in-time manufacturing across the US. Inflation ticks up. Supply chains fragment. The cost of deglobalization becomes visible in real time. What's the contrarian angle? Most analysts assume these gray zone operations stay contained, intimidation without military escalation. But Beijing's playbook suggests otherwise. Look at how it handled the South China Sea over the past 15 years: incremental island building, then militarization, then normalized presence, then restrictions on foreign military activity. Each step was sold as routine. Each step hardened into new normal. The Paracel operation fits that exact pattern. For investors, the signals are these: first, watch shipping insurance costs through the Taiwan Strait and the Malacca Strait. If they spike, you're seeing market participants price in genuine disruption risk. Second, monitor semiconductor supply chain commentary from Apple, Intel, and Nvidia over the next earnings cycle. If they mention Taiwan geopolitical risk for the first time, that's a leading indicator of institutional concern. Third, track yuan stability. Beijing uses currency pressure as a negotiation tool when tensions rise. The timing matters because we're entering earnings season. Tech companies are already dealing with margin pressure from capital-intensive AI infrastructure spending. Add geopolitical risk to Taiwan's supply chain status, and guidance downgrades become likely. That's a 3 to 5% correction scenario for semiconductor stocks, and a corresponding drag on the Nasdaq. But here's what to watch most closely over the next 72 hours. Does Taiwan respond with a formal diplomatic complaint and ask the US for a security statement? If yes, expect Beijing to escalate the operations further. It's the classic spiral dynamic. If Taiwan stays quiet and lets it pass as routine, Beijing interprets that as space to push harder next time. There's no neutral option in this game. The real story isn't the ships. It's the baseline being established. Every day these vessels operate in those waters without serious pushback, Beijing's claim to that territory gets stronger in the eyes of Beijing's courts, Beijing's citizens, and Beijing's military planners. Taiwan knows this. That's why this move matters enough to announce publicly. It's trying to break the normalcy, to make it expensive politically for Beijing to continue without escalation. For markets, the bet is simple: either these operations become routine background noise and risk premia compress, or they're the opening move in a more serious pressure campaign and risk premia spike. Your job is to watch which way the market is betting in real time. Shipping stocks, semiconductor stocks, and defensive currencies will be your leading indicators. This is worth monitoring closely. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.